Yeah, hello and welcome to another update video about Ethereum. The situation hasn't changed really. Still looking at this possible ABC structure here, just zooming out for everybody who's new. This is an overall bullish trade setup here. Yeah, we are quite bullish on Ethereum as long as 1534 is holding. And the idea is that as soon as this correction in a wave 2 is over, we can rally in a third wave to the upside. So the idea is that we are in a larger impulse to the upside, and within this scenario there are a couple of ways how this can unfold. So we've got two scenarios. We have a short-term bullish and a short-term bearish setup. Let's start with the short-term bearish one that is still being favored as long as the price only shows 3 waves to the upside because of an unusual bottoming structure. Doesn't mean it couldn't have bottomed. It's actually quite likely it has bottomed, but I'm leaning towards another low just purely because of the unusual bottom structure and because we only have 3 waves up off the 12th of May low. So the short-term bearish setup suggests that we came down in wave W, moved up in an X wave, came down, or we are coming down in a Y wave. In this, we're currently looking at an A wave down, a B wave up, and a C wave down. That could take us sort of to 1660, maybe a little bit lower. It depends a little bit on how high that B wave goes, okay? So now let's zoom in. This is the overall, or let's say short-term bearish setup or scenario. In this one, obviously we're looking at the 3-wave move to the upside, A wave up, B wave down, C wave up in large wave B. And in this B wave, we can still go higher as long as we don't break down here in this C wave. So this C wave obviously can be over at any point. We already rallied into resistance. This is standard Fibonacci resistance. Be aware of these levels at 1914 and 1961 for a completion of that C wave within wave B. If we break above 1961, we have next structural resistance at 2020. And that B wave is basically valid until then. So even if we rally above standard Fibonacci resistance, as long as we only have a 3-wave structure to the upside, it can still be a B wave. In this structure, you can see that in the C wave, we have a wave 1 complete, a wave 2, and we are working now on a third wave. I think we should get one more high or two more highs, but that is only my view as long as we're holding the wave 1 high at 1859 here. Yeah. As soon as we break below that level, it's a first signal that market is breaking down and that this B wave may have already topped, which is entirely possible because we are in standard resistance, and sometimes you just don't get this last high, but that would be a confirmation level for me that we are coming down. As long as we only get 3 waves up, as I said, and I mentioned the levels where we could react, this is for me only a high B wave, which could result in a C wave sell-off. This could become something more bullish, surely, and then the low would have been in here on the 12th of May. This would then count as a wave 1, this would count as a wave 2, this would count as a wave 3, but also here I would like to see one more high to have a reliable third wave, then a wave 4 and a wave 5. And then we have 5 waves up and we can get a 3-wave pullback afterwards. If we get 5 waves up, so until we get that third wave here, both scenarios look the same. Only if we then get a higher low and can count a wave 4 and a higher high, we can look at this as a 5-wave move up and the trend has possibly shifted and that we have bottomed. Yeah, these are the two scenarios. They're both likely. Just be aware of the differences that could occur up here. So that means as long as we're holding above 1859, we should get one more high, maybe to 1961. That's at least next resistance. This is the next decision point then for the market. And when we get the pullback then, the major decision point will be here. Do we get a higher low or not? And if we get a higher low, this can count as a wave 4, and then we get a wave 5. And if we get 5 waves, then again, we have this as a larger wave 1. It would have to be a diagonal. And then we can calculate support for the wave 2 pullback. That will be another pullback zone that we can look at for a possible trade setup. These are the two scenarios. So let's see what happens next couple of days. There'll be a lot of discussion volatility related to the debt ceiling vote and so on. So looking forward to that, and I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.